Apple has 245 billion US dollars in cash. So where do you think Apple keep all this cash? Do you think they have some sort of vault where they keep this cash, or is it in Tim Cook's pocket? Actually, they use a custodian bank, and today we will look at the world's largest custodian bank, Bank of New York Mellon. If you're new to the channel, please consider subscribing. I make one new video every day about the stock market, about investing, and about entrepreneurship. And at least twice per week, I will analyze one stock. Bank of New York Mellon is the largest custodian bank in the world with 33.3 trillion US dollars as assets under custody and 1.9 trillion US dollars as assets under management. What is a custodian bank? A custodian bank is a bank which does not engage in traditional banking. By traditional banking, I mean something like lending money, things like where you can deposit money and you will get interest, and where you can open a checking or a savings account, or where you can invest for an investment bank, where the banks will invest your money. This is a traditional banking where you can get access to an ATM. You will not see ATM of Bank of New York Mellon. Let's say you give your money to the bank. Do you think that the bank actually keeps all of your money? That's not the case. Only a few percentage, it depends on the country. In the United States, it's 10%. They need to keep in their vaults. The rest of the money they can use, they invest it, they give it to other people, they lend this money to other people. This is how banks make money. So the bank will hardly keep all your money in its vaults. But if you give your money to a custodian bank, they will keep the money. This is why big corporations such as Apple, wealthy individuals, and people who have a lot of cash, they will prefer to keep all the things in a custodian bank. Because let's say a bank goes bankrupt, a traditional bank goes bankrupt, and you have your money there. Not all of the money is insured. Only 250,000 US dollars is insured in an American bank. So if you have 1 million US dollars in the bank in cash and the bank goes bankrupt, the government will give you back 250,000 US dollars. But the rest of the money you are going to lose it because it's not insured. But if you give all of your money, 1 million US dollars, to a custodian bank, and the custodian bank, even if it is safe, let's say it goes bankrupt. So now, because they never actually use the money, you will get the money back. When you give the money to a custodian bank, they keep it in their vaults. But now most of our money is in digital form, so they will keep it on computers, on servers, so it will remain there. They are not using it, they are not lending this money to anyone. So as a custodian bank, most of the custodian banks, they are for wealthy individuals, for hedge funds, for mutual funds, for big corporations. This is where all the money goes. And that's why you will see that for a bank, for a normal bank, they will have maybe the best banks in the world, the greatest banks in the world. They have about 3 trillion US dollars as assets under management, but a custodian bank can have dozens of trillions of dollars as assets under custody, because this is where most of the money is. Bank of New York Mellon was founded as Bank of New York in 1784 by two of the American founding fathers, Alexander Hamilton and Aaron Burr. So eventually Aaron Burr and Hamilton, they became rivals, and they had a duel where Alexander Hamilton was shot and killed by Aaron Burr. So now let's come back to Bank of New York Mellon. It was one of the founding members of the New York Stock Exchange in 1792, and today it is still the oldest operating bank in the United States. In 2006, Bank of New York merged with Mellon Financials to form Bank of New York Mellon. There was one very rich American banker and financier called Andrew Mellon, so this is where the name of Mellon Financials come from. Today, 8% of Bank of New York Mellon is owned by Warren Buffett's Berkshire Hathaway. Bank of New York Mellon has two main business segments. The first one is investment services, which is 77% of revenues. So all of these are custodian banking services, and how they make money from custodian banking is from fees. Because if you keep your money, or you have something valuable, you will give this bank to keep it for you. They will take a fee from you, and this is how they make most of their money. The remaining 23% of revenues come from investment management. So yes, they do have investment management, and that's what I said in the beginning of this video, that they have 1.9 trillion US dollars as assets under management. So they do wealth management like a traditional bank, but it's mainly for wealthy individuals. It's not for everyone else, because they don't have so many branches and they don't have ATMs like I said. So if you are a wealthy family, you are a wealthy individual or a corporation, and you want the bank to manage your wealth, you can do this. It's possible. And again, here most of the money come from fees, but they do get money from those transactions actually, because they are investing. And now let's look at the fundamentals. It's at $52 per share. The market cap of the company right now is $50 billion. The PE ratio is 13. The price per book is 1.36. The returns on equity is 10.3%. Profit margin 26%. Dividend yield 1.98%. Debt to equity ratio 0.74. Current ratio 0.50, beta 0.94, and PEG 1.33. So these fundamentals look fantastic. But the beta is quite as much as the S&P 500. So 0.94, which means they most of the time just follow the S&P 500. If the S&P 500 will go up, they will go up. If the S&P 500 will go down, they will go down. So it's because it's a safe investment. If you're investing in Bank of New York Mellon, you can say that it's a very safe investment. It's very low risk, and you should not be expecting too much return from this investment. Even their debt to equity ratio is 0.75, and for a bank, it's actually very low. If you look at the Goldman Sachs, they have a debt to equity ratio of more than 5. So I will say that it is a great stock to own, and it's a buy, of course. You should buy this stock if you want this safe stock, but I'm not going to buy it. The reason for this is because I'm looking for multiple banks right now. I'm looking in the banking industry, looking for smaller banks like this one. But the problem here is that I don't really see such a huge growth potential at this price. If the price falls to, let's say, $44 per share, then I will consider buying, because then I will get a potential growth. Even if the stock pays dividends, yes, I do see the growth because it is a safe stock. And eventually, if the recession comes, when a recession comes, rich people are hit badly by recessions, and this affects the business of this bank. And then maybe I will find a good opportunity to buy then. But for the time being, I'm looking at other stocks. So let me know in the comments, what do you think? Which is better, a safe stock with slow growth, or a risky stock with high growth? Thank you for watching this video. Please like, subscribe, and share. Subscribe for one new video every day about the stock market, about investing, and about entrepreneurship to make you a better investor. Have a nice day and goodbye.